On the Money Watch, if you pay your credit cards in full and stay on top of your credit score, you probably think you're making good money choices. I know I do. But you may want to think again. Certified Financial Planner Joe Bert joins us now to talk about some more of your good money habits that may not be so good after all. Good morning, Joe. First, though, while we have you, I have to talk about the stock market. It plunged at the end of the week, ended down more than, it ended 530 down, right? So what does this mean for us, specifically things like 401ks?
It really shouldn't mean anything.
Okay.
What happens, and this is where most people make their mistake, Tom, is they run to their computer. Oh my gosh, what did my account do?
Right, I saw a lot of people saying bye-bye retirement.
Yeah, no, that's in fact, actually, it's good news for you, because right now what you're doing is you're buying shares with every paycheck. And the name of the game is to accumulate shares. The price just went down. Stay where you are. Do not panic. The mistake that people make, they get out at the wrong time. Stick with your course of action. The world is not coming to an end. We're not having a repeat of 2008, 2009.
Okay.
This is just a normal correction.
Momentary thing. Yep. All right. So now let's move on. Let's get back to those good money habits that can actually be bad.
Right.
First, paying in full. I am all ears on this one.
Well, I know that's a good habit to have, and you want to do that. But the amount of credit that you have on your credit card is really more important than paying your balance in full, because what the credit reporting agencies do is they take a snapshot every day, or randomly, I should say. You know, you have 3 credit reporting companies. They're looking randomly at how much credit you have. And what you want to do is not have more than 10% total of your credit utilization used, and no more than 30% on one credit source. So they look at that. That's very important. Paying off your credit card in full is a great idea, but the amount of credit that you're using throughout the month is very important as well.
Okay. Checking your credit score. What do you mean?
Well, this is not necessarily a bad thing to do.
Okay.
Because you want to, and I think this is a fallacy, a misconception out there. You want to know what your credit score is. Now today, they're really making this a little bit more sophisticated. Your banks and auto companies use somewhat of a different score. The best place to get a composite score is go to creditsesame.com. Creditsesame.com will give you a full picture, but it really doesn't hurt to look at your score like a lot of people.
And you want to look at your Beacon score, is that right?
Yes. Well, your FICO score.
FICO score. Okay. All right. Putting a fraud alert on your credit reports after a breach.
Yeah. What the fraud alert says, you know, if somebody may be checking my credit card, just let me know. What's better is what's called a security freeze. That freezes everything. Nobody can get credit on it unless you approve. In fact, they can't even look at your score. But what you have to do is go to the credit reporting agencies, ask for it, and you got to pay for it.
All right. What about keeping unused accounts open?
Keeping unused accounts open, it could be bad for you. You know, you want to have available credit. If you have a high credit score, it's not bad to have that open. If you have a low credit score, you may want to clean up some of those accounts.
All right. Good stuff to think about, as always. Thank